How to take advantage of deferred restricted stock units. Find out what exactly they are and how to maximize them. In a nutshell, deferred RSUs are company promises to pay employees in stock or cash at a future date, based on certain conditions like staying with the company for a specified period. Deferred RSUs are a form of equity compensation where employees receive company shares or cash at a future date, subject to certain conditions like vesting schedules. Vesting schedules play a crucial role in deferred RSUs, determining when these units mature and become available to the employee. The tax implications of deferred RSUs are significant, affecting both the timing of taxation and the overall financial benefit. Comparing deferred RSUs with other equity options like stock options, restricted stock, and phantom stock provides a broader perspective on equity compensation choices, emphasizing the unique position of deferred RSUs in an investment portfolio. In simple terms, think of deferred RSUs as a company's promise to give you shares or cash in the future, based on certain conditions. Grant date. A company grants you RSUs represented by a document symbolizing the agreement. Vesting period. You need to work for a certain amount of time, usually years, before you can actually own the RSU. Vesting date. Finally, the waiting period is over. Settlement date. You can decide what you want to do with your RSU. Tax implications. Like all other income, the tax liability is now due on the vested RSUs. You get the key, shares or cash, only after certain conditions, like staying with the company for a specific period, are met. It's a way for companies to reward loyalty and performance. Let's say your company grants you 1,000 RSUs, but these RSUs vest over a 4-year period, meaning you don't own them all at once. After each year, you unlock 25% of the RSUs, 250 in this case. After 4 years, you've unlocked all 1,000 RSUs and can finally open the treasure chest. Reduced risk of ownership dilution. Deferred RSUs help companies control the dilution of their shares by delaying the issuance of new shares until the vesting period is complete. Stacy pays taxes on the vested RSUs on each vesting date. Scenario 2. Immediate RSUs. Stan, a marketing manager, receives 1,000 RSUs with immediate vesting. Deferred RSUs offer significant tax benefits compared to traditional compensation methods. Tax deferral, delay paying taxes until RSUs vest, potentially reducing tax liability. Lower tax rates may be taxed at a lower marginal income tax rate when RSUs vest, compared to receiving them all at once. Capital gains tax potential. If selling vested RSUs after the vesting date may be subject to lower capital gains tax rates. We can't forget about diversification strategies in the context of deferred RSUs, an important tactic for risk management and creating a resilient investment portfolio. Deferred RSUs, while valuable, should be one part of a diversified investment portfolio. Deferred RSUs offer valuable potential for wealth accumulation, but their unique characteristics require careful consideration when it comes to estate planning. Vesting status. Unvested RSUs are generally not part of your taxable estate until they vest. Estate taxes. The value of vested RSUs on the date of your death is included in your taxable estate. Designate beneficiaries. Choose beneficiaries for your vested and unvested RSUs to ensure their smooth transfer upon your death. Tax-efficient transfer of wealth. By designating beneficiaries, you can control the transfer of your RSUs and potentially avoid probate delays and costs. By understanding the relevant tax implications and incorporating strategic beneficiary designations, you can leverage your RSUs to create a lasting legacy for future generations. As we wrap up our discussion on deferred restricted stock units, RSUs, it's clear that they are more than just a part of your compensation package. Understanding RSUs, from their vesting process to tax implications, is crucial for effective financial planning and making the most of this equity compensation. Integrating deferred RSUs into your investment portfolio requires considering your risk tolerance and long-term financial plans, including retirement and estate planning. Thank you for exploring the world of deferred RSUs with us. Be sure to like and subscribe for more personal finance tips and read the attached article in the description below to read the article for more in-depth information on RSUs.